Well, hello, everybody. Thanks for joining us. Um, my name is Stephen Mead with Domicile Real Estate. Real estate for people who love houses and also people who like making informed, informed decisions. This is our SoCal housing market update for data as of August 10th, 2020. And just as a reminder to everyone, for us, Southern California, means our data is aggregated across Los Angeles and Orange counties for most of our data. So just a reminder, that's the market that we're talking about, that we got a lovely call this week from someone who had some questions about Central Valley real estate. And we were able to apply a little bit of our knowledge to their unique market situation. I kind of put a clever title on here, and it's not clickbait. I asked the question, does it seem like home prices just went up 6.5% in a very short period of time? And I'm going to get to that at the end and explain how we know that that is in fact exactly what has happened. But without further ado, let's jump into kind of some of our normal stats. Understand that this week we have our first complete month of August. So we have some additional stats for you that we do kind of on a monthly basis as well. So let me go ahead and share our screen here. And we can jump into our new listings. And let me grab my spotlight here. So one of the things you notice in our under $1 million category, and again, this is for Los Angeles and Orange County homes, that's condos and single family homes. This new listing number, it just seems stuck under 2,000. Like we're just not getting a lot of people to put their houses on the market in our under 1 million category. And then if you look over here, even in 1 to 2 million, again, we've kind of hit this sort of plateau where it just doesn't seem to be going up much more. And if we take a look and we go and we look versus 2019, I think we can see that again, right? This week we were at 1,914 new listings. This time last year we had 2,057 new listings. So I mean, that's down, roughly 140. That's down like 7%. I mean, that's a pretty strong lack of new listing performance. And I keep expecting that other shoe to drop, right? And when I talk about that other shoe, I've mentioned this before. If you're a person who's been considering selling your house and you are sitting on the fence and you see your neighbor just get in a ridiculous number for their house and those numbers are starting to hit, you would expect that we'd see a bunch of listings come into the market. And I feel like that's just not happening as much as I would have expected by now. And we're still underperforming 2019 in terms of new listings. But if we go ahead and we jump here to new escrows, we see that we have the opposite problem. And the problem with that is, guess what? We saw a little bit of relief last week and now they've jumped back up. Same exact thing is kind of happening over here in 1 to 2 million. This number, we're seeing the jump in new escrows. And here's the problem, folks. I talked about this last week that this is a lot like, the wiener dogs where the front moves and then the back catches up. And that's exactly what happens in this market. We are very supply constrained. And that's confirmed when we go ahead and we take a look. If we kind of go ahead and we look at where were these new escrow numbers last year? Well, guess what? So we have this situation where we have fewer listings than we had last year, but we have more new escrows. And, that's why we're seeing this funky oscillation, because the market is so supply constrained that a bunch of new listings come on the market. Then we get a bunch of new escrows the following week. But then now there's not enough houses in the market. So I bet next week we will see a drop in new escrows. And we'll kind of see this oscillating pattern that goes back and forth. And that's just going to happen because we simply do not have enough houses for people to buy. I have a feeling that the number of new escrows could be significantly higher if we had more houses for people to sell. And if we come here to our absorption rate, right, and this is our sort of supply and demand relationship, a couple of things that are noteworthy. Number one, guess what? We saw a rebound in our 1 to 2 million category. I think last week I was feeling like there might be a bit of softness developing in that $1 to $2 million market, but it appears that is not happening because we bounced back. So if this sort of continues, in this sort of, above 70%, that's a pretty strong, healthy 1 to 2 million market. But if we're looking over here in our under $1 million market, right? I mean, we bounced back into the 80s. And I've said this before, anything above 80% is very much a seller's market, and there's going to be a lot of competition. And, one of the things, if you're out there and you're a home buyer, one of the things that you probably noticed is, attractiveness of a house is not spread evenly across all the listings, right? So that just because we have this hyper competitive market doesn't mean every single house will have multiple bids. But what it means is the top 20% of the listings are getting 80% of the traffic. And, that's actually usually the way it is in most markets. But what's crazy about this one is that just means that relationship between supply and demand is so far out of whack. 80% of the activity just means there is a huge run on that top 20% of listings. And I would even argue right now that people are really in that mode where they're settling. We might see that really is affecting sort of the top 30% of listings are getting a lot of activity right now. So, when you look at these graphs, understand that when we're talking about this absorption rate, we're very firmly in this, let me get my pointer back here. We are very firmly in this sort of hyper competitive zone, and we have been for a while. And I just don't see it ending anytime soon, especially with as interest rates continue to drop. That's just driving a huge amount of demand in our market. Now, because it is the beginning of the month, this is a graph that I like to bring out here. And this is talking about the first week of the month in our under $1 million category. And this is 2019's absorption rate. So, 2019 was a market with healthy demand, 70s. We spiked a bit in July, but then August, we were right back down in the mid 70s. That's a healthy market, if not a hyper competitive one. We are in the upper 80s right now in our market for under $1 million in 2020. So if we were showing that, we would be like having a bunch of these 90% in a row. And, I think that really just tells you that this just kind of is this confirming information, which is something I've talked about before, is you don't want to hinge your predictions and your assessments on one piece of data. You look for other corroborating pieces of data, and this absorption rate kind of corroborates this hyper competitive, supply constricted market assessment. Because again, it is that first week of the month, we are also going to go for our closed sales. How are we doing versus last year in not only the prices and the number of transactions, but the number of escrows, but the number of actual closed sales. And I think I told you, right? We saw that 2020 looked like it was going to be a great year. We were doing better, trending over 2019. And then April hits and May. June started a recovery. July got pretty close. And now by the first week in August, we're pretty much on par with the number of units versus 2019. And I will actually tell you, I think our September close numbers are going to be past 2019. That is my prediction. And when you think about it, that makes total sense because September's closings are really, from the beginning of August. Those are people that negotiated contracts right now in the past week. So, and if we look at this as a change versus 2019, I think we can really sort of see what's going on. Better than 2019, then we took a dive, and we've had this kind of recovery ever since. And guess what? Now we're right back about where we were at this point last year. If we look at our pending list price, we had a spike last week, and then we had a situation where it dropped down a little bit. You'll notice we have some periodic flexibility in these numbers. This just seems to happen. There's a little bit of variance, but if you look, our trend line is pretty strongly up. And I'm going to take a second to talk about something because I've reiterated this in the past, and I really feel like every other episode I need to do this. We like to use pending list price figures for everything that went into escrow. And the reason why we do that is because I want numbers that I can share with you that are from the past week. If I wait for these transactions to close, that data is a month old. So it's not useless data, but I'd really like to get kind of take the temperature of the market, over the last week. But it's really important to understand that there are some restrictions and some limitations on using that data. And the first limitation is that that is not a sold price. That is the list price when it went into escrow. So if you're in a hyper competitive market where houses keep going into escrow well above their list prices, you might not see price increases that are happening. So in an up market, using that average pending price, list price, will tend to underreport price increases. And in a dropping market, it will tend to make the market look better than it actually is. So it's really important to understand sort of that effect and sort of weigh that. And that's one of the reasons why we've started using that list to close price ratio overall, because it's really important to sort of understand, exactly where that market is and sort of how are agents pricing their houses versus the realities of the market. So just kind of as an aside, it's really important to sort of understand that there are some limitations with this data. It's great for comparing things week over week, not always perfect at giving you an absolute sense of sort of where median prices are going, which is what a lot of people are trying to predict. So you kind of have to use this data in combination with other pieces of data. So speech over on nerding out there, and let me go back to our graph. Again, though, you still notice, even though this was a drop over last week, it was still higher than 2 weeks ago. I still believe that our trend line is looking like this. And we're going to see some data towards the end here that I think shows, in fact, that is what's happening. And if we go on to our next graph, this is our list to close ratio. And what's important to remember is when we looked at sold data, which is what this graph shows, it is talking about sales that were consummated, right? Or sales that were negotiated a month ago, actually a month to 40 days ago. So when you see this number rising, what does this number tell you, this list to close ratio? It tells you that the market is moving faster than listing agents are predicting or sellers are predicting. And I'm going to repeat that again because it's really important to understand this distinction. This tells you that as we've gone up from this 99%, it means that the market growth is outpacing what listing agents think is happening. So, if we're looking into that, it means that, list prices aren't catching up. And the reason why that's really important to understand is when we're looking back, remember our data is based on pending list prices. It means that as long as this graph looks upward, we are actually underrepresenting and we are underreporting those numbers. So hopefully that makes sense for you guys. Okay, and moving out here, let's get back to our next chart. And if we look at our pending list price for our, $1 to $2 million range, again, this might look pretty flat, but we've seen a bit of an increase over the last couple of months. This one we have far fewer pieces of data, and when you have fewer pieces of data, these numbers are going to bounce around a little bit more, and I think that's just sort of the nature of the beast. Now we look at another piece of sort of corroborating evidence, right? And we're seeing these pending sales go up, but not by a huge amount. And I believe that that is supply constrained. And if it is supply constrained, you would expect to see days on market dropping. And for our under $1 million category, that has been a pretty steady drop. And if we look on here, orange is the middle of April. It's just been deteriorating and going down. We're now at 27 days on market on average for listings that go into escrow, which is just, that's just a nuts statistic. Like that is a very, very short period of time. In our 1 to 2 million, we did notice that it spiked up a little bit after a really big drop. I'm curious to see where that number is going to go next week. I'm not sure. And again, our $1 to $2 million market is going to show a little bit more variance just because our sample size is smaller. To give you an idea on these sample sizes, one of the reasons why we use LA and Orange County together is because these sample sizes are bigger, and we really need bigger sample sizes for this to work right. So to give an example, I think we're around, our new escrows were something like 1,650 under 1 million, and we're like 450 for our 1 to 2 million. So we almost have a sample size that is 4 times as large for our under $1 million stats. Just to kind of put that and throw that out there. Now we're gonna talk about, and before I don't want to show you guys this too fast. One of the things that I think is really interesting to track in this is this notion of affordability. And I have said on multiple occasions, we've been trending around 90% of affordability versus 2 years ago. And that means payments are 10% less. So 90% or 10% less than 100 of where payments for the median house were 2 years ago. And I will not, there's two things that make that number go down. Dropping median prices, which hasn't happened, and dropping interest rates, which drop that payment number. And we have been very much driven by these dropping interest rates. And even though our payment level is 10% down, you could even argue that because of inflation, it's really down 16%, 17% from where it should be if it were just staying the same, if it were just the same as it was 2 years ago. And that hasn't been what happened. And one of the things in this market I think we noticed is about a month ago, it felt like the market just took a big jump, like it just stepped up in a matter of days. And unfortunately we have to wait a month to really see whether that data happened. And this affordability graph that we use actually tracks two things combined into one. It tracks interest rates, which have been steadily dropping over the last month, and it also tracks median home price. And I'm going to show you this graph because something kind of crazy has happened. So let me get out my pointer here. And I apologize for going kind of fast, right, this week. I know it's a little bit later than usual, and we're pretty slammed here. If we look at this number for August, for the first week in August, and then we look at it for the past week, look what happened. We had a really nice steady graph. And, for the last months, we have been trading, since April, we've been trending in the low 90s. And all of a sudden, look what happened. Look at how far we've jumped. We've jumped up almost 5%. And guess what? It's not because of interest rates, which have actually dropped. It's because of prices. The median price, for July, the median home price for the first week in July, recorded sales, was about $765,000. For the first week in August, it was $810,000. And for this past week, for the sales just in the last week, it even moved up further. And that is, it's moved up to $815,000. So that is essentially a $50,000 jump. That's almost a 7% jump in median prices over a 30-day period. We almost always have what I call, I call this the spring bounce. It happens almost every year. There's some period of time where prices kind of jump a little bit. And this year, this isn't a bounce. This is like, for those of you old enough to know this is playing Super Mario Brothers and hitting the springboard. This just is like a huge jump in a very, very short period of time. So if you're a home buyer out there and you felt like the market just changed overnight, it did. Literally, the market changed in a matter of weeks. The good news is, we're still trending way cheaper than houses were 2 years ago. When you factor in insurance or inflation, we are still down over 10%. Also, for the sellers out there, we're still trending, we still are short on listings. We just don't have enough in our market. So if you're a seller that wants to sort of cash in, especially if you're a move-up buyer, right? If you're a move-up buyer, the low interest rate environment really helps you. And, there's no reason for you to wait because you think, well, maybe I can get more for my house. You might if you wait, but that means you're also going to be paying more for whatever you buy. So, if you're a seller, I'd say the stats show with our limited new listings, it is still very important and very advantageous to be on the market now. Finally, before we close, something else I wanted to mention briefly that I think is really important. And that is we're going to be doing kind of a bonus video here that I'm calling a tale of two 2021s. And I'm going to kind of explore sort of the data behind two divergent paths of what might happen. So kind of taking both ends of the spectrum of possibilities and exploring those and what those might mean for you if you're a buyer, if you're a seller, how that might affect you. As I've mentioned in the past, I'm not a huge fan of giving sort of these golden predictions. I'm really talking about possibilities, percentage chances. I think things might go one way or another, and just understanding those risks so that you can make sort of smart decisions. I think making decisions based on guesses of where things are going to be in a year is kind of silly and not really very prudent decision making. Anyhow, thank you so much for listening. We'd love to hear from you. Questions, comments, put it below. Maybe we'll even answer them in our next live video next week. And yeah, we will see you next Tuesday for another weekly market update.